When we think about the global energy transition, it's a lot like watching a giant stage play. What we all see, front and center, is pretty impressive, right? It's inspiring. But the real story, the one that actually decides how this whole thing plays out, well, that's all happening behind the curtain. And in this explainer, we're going to take you backstage. So what's the on-stage performance look like? Well, picture this. A landscape just totally transformed, with gleaming solar panels and these massive towering wind turbines stretching out as far as the eye can see. This is the public story we all hear, a story of a clean energy boom that's just shattering every record in the book. It's a really powerful and optimistic scene, for sure. But it's only the beginning of the story. And this whole spectacle is backed by some absolutely staggering numbers. In 2024 alone, global investment in the energy transition hit a record-breaking $807 billion. I mean, that's the kind of money that completely reshapes entire industries, not to mention economies. But what's truly wild here is the acceleration. We're not just seeing some steady, predictable growth. We are witnessing an absolute explosion of investment. Just look at that jump, from $404 billion in 2020 to over $800 billion just 4 years later. That's a 19% compound annual growth rate. That's the kind of momentum that really does reshape the world. It's an impressive show, no doubt about it, but it kind of makes you wonder, right? Who's footing the bill for all this? Who is writing the script and directing all the action? To really get that, we need to go backstage. So the first place we're going to look backstage is the engine room, finance. This is where all the money comes from, where the deals get made that power absolutely everything we see happening on stage. And the cast of characters in here is pretty diverse. You've got the aggressive, high-growth strategies of private equity and venture capital. You've got investors who are totally focused on sustainability through things like ESG and green bonds. And then you have the real heavyweights, the huge infrastructure funds, who are thinking in terms of decades and massive, massive scale. And the involvement of these players, especially private equity, it's off the charts. In the US alone, the value of private equity-backed energy transition deals surged by an astonishing 7,300% in the last 5 years. That's not a typo, 7,300%. What that tells you is there's been a massive strategic shift in where private money is flowing. They're treating renewable infrastructure not as some niche little thing, but as a core, high-growth asset. So what's driving this absolute flood of cash? Well, a huge part of it is new and, frankly, insatiable demand. I mean, just think about the rise of AI and the explosion of data centers. As Roman Boner from Rebecca points out here, these places have a massive, urgent need for power, and they are willing to pay top dollar for it. This creates a huge, huge economic incentive for investors to fund new renewable projects as fast as humanly possible. Okay, let's move on to the next area backstage, and you'll see how this all connects. Money is a fuel, right? But government policy, that's the script. It sets the rules, it creates the incentives, and honestly, it can change the entire direction of the play overnight. You see, investors, it doesn't matter how much money they have to play by the rules set by governments. A single change in the law, a new tax credit, or even taking an old one away, that can be the difference between a booming industry and a forgotten technology. It literally determines which technologies thrive and which ones get left behind. This slide just illustrates the point perfectly. Take a look at the comparison. Under the Inflation Reduction Act, or IRA, key tax credits for wind, solar, and electric vehicles were set for a decade or more. That gives investors long-term certainty. But under a later policy change, this fictional One Big Beautiful Bill Act, those timelines get drastically cut. Now, if you're an investor planning a multi-billion-dollar 10-year project, this kind of policy whiplash is a total game changer. It completely rewrites your entire financial model. And the script isn't just about financial incentives anymore, it's also about geopolitics. Policies are now embedding national security concerns directly into the money. This term, Foreign Entity of Concern, or FEOC, is super important. New rules can restrict or even block tax credits if a project has any ties to companies from certain countries. So it's no longer just about clean energy, it's about where the parts are coming from. And this brings us to the final area backstage, where that clean, simple story we see on stage meets the messy reality of the physical world. This is where we find all the unexpected plot twists, the global bottlenecks. That pristine solar panel you see on stage, it begins its life right here in a mine. The entire energy transition relies on this incredibly complex global supply chain for critical minerals, a chain that is far from secure and is often highly concentrated in just a handful of countries. And that concentration, It creates a whole new set of geopolitical risks. I mean, just look at this concentration. 84% of all cobalt mining is in the DRC, and then 73% of that cobalt is refined in China. Nickel is a really similar story. So when the supply chain for the basic building blocks of your entire energy strategy is this narrow, it creates massive geopolitical risks and vulnerabilities. And the challenges don't stop with mining. Not at all. You can build all these solar and wind farms you want, but if you can't get that power to the cities because of grid bottlenecks, the projects get delayed or even canceled. Then you add in rising interest rates and these years-long permitting processes. You've got a whole series of really tough hurdles that can stop even the most promising projects dead in their tracks. So the really crucial point here is this. The promise of clean power, represented by these beautiful wind turbines, is entirely dependent on the reality of the grid that has to carry it. The grid is often the most overlooked character in this whole play, but without a massive upgrade to our transmission infrastructure, the whole show just grinds to a halt. Okay, so we've been backstage, we've seen the financial engine, we've read the government script, and we've run into the physical bottlenecks. But what about the audience watching this all unfold? What is their role in this really complex play? Well, first, I think we have to recognize what this transition truly is. It's not just a technological problem that we need to solve. It's a deeply interconnected system of finance, policy, and global supply chains. What happens backstage is arguably way more important than the technology we see on stage. And that leads us to our final question. If we, the citizens and voters, are the audience, what role do we play? I mean, we influence the policymakers who are writing the script. Our savings are being invested by those financial actors. Knowing what's happening behind the curtain isn't just interesting, it's empowering. It lets us understand the real levers of change and ultimately decide what kind of ending we want for this story.